Stocks on Wall Street closed mixed. The S&P 500 notches back-to-back losses. The Nasdaq slides another 350 points as chip stocks sell off. Asian markets are largely lower as the tech sell-off continues. The GIFT Nifty is indicating a subdued start for our own markets. Crude oil prices decline after the US and Iran agree to hold talks in Oman on Friday. Despite the differences about the agenda, gold extends its gains for the third day in a row. The RBI's monetary policy meeting is entering its second day today. The CNBC TV 18 Citizens MPC votes unanimously for a status quo policy. The majority of the members expect at least one repo rate cut by the RBI this year. The key to monitor will be how the India-US trade deal impacts the committee's decision this time around. Reliance Industries chairman Mukesh Ambani says that the world is taking note of India's rise, adds that the startup industry excites him the most and he can see 100 Reliance Industries emerging from India. That is an exclusive. And this is the era of India, says BlackRock chairman Larry Fink, expects India to record high growth for over 2 decades, calls India a leader in digitization and warns countries like the US could be falling behind. It's Thursday morning today. You're watching Power Breakfast right here on CNBC TV 18 in the Mumbai News Center. I'm Hormuz Fatakia. Let's first take a look at how the Asian markets have started off today. And it's a dominantly red screen considering the sell-off that you saw in the tech shares on Wall Street overnight. The Taiwanese index is trading lower by 0.6%. The Hang Seng is down 1%. Similar sort of trend available for the Kospi as well. The chip stocks are selling off there as well. So almost a 0.25 to 2% cut on the Kospi. The Nikkei though, absolutely flat, and the Shanghai Composite trading 0.5% lower. So the Asian markets have opened largely lower, carrying off from where Wall Street left off overnight, particularly the Nasdaq. Pull up the GIFT Nifty, give you an idea of how our own markets are likely to start off. Well, after a topsy-turvy day yesterday, the implied open is still suggesting an absolutely sluggish/flat start as we speak, considering today being the sensex weekly expiry. To set you up for today's trade, we are here to tell you the trade setup, the stocks you need to keep an eye out for, and of course the setup on the FNO side of things as well. You know, first up, you take a look at what happened to IT yesterday. You would believe that the Nifty would not have managed any sort of gain yesterday, but the Nifty IT, despite being down 6%, the Nifty managed to close in the green. Then that too by close to around 50 points, and that is because the index heavyweights managed to put their hand up in yesterday's trading session. Reliance Industries, ICICI Bank, HDFC Bank, all of them managed to offset the losses that were seen in the IT stocks. So what about today? Well, we need to see whether that sustains, today being the Sensex weekly expiry. You see any further recovery in the IT stocks, whether these index heavyweights continue to pull the index higher if in case there is any further pressure on IT. And of course, there is another earnings heavy day in store, not miss sight of that. Now, of course, the Nifty move today hinges on how IT goes today, whether it be on the upside or on the downside. Well, because ex-IT yesterday, the Nifty could have easily tested 26,000, make no mistake. 26,000, that remains the first key level on the upside. Of course, 25,800 is the immediate one. The psychological one remains 26,000. Now, the Nifty Bank was relatively steady compared to the last 30 minutes in which the index fell in yesterday's trade. But otherwise, compared to the Nifty Bank was fairly steady. Today, as I mentioned, it's an earnings heavy day. Bharti Airtel, Hero MotoCorp, IOC, Keynes Tech, PFC, LIC, a lot of results today. And of course, watch out for NSDL because the shareholder lock-in is ending today. But for now, the GIFT Nifty is indicating a subdued start, the 25,800 being the first level on the upside to watch out for, and then followed by the 26,000 mark. Over to Ria now, who would list out the stocks that you need to keep an eye out for in today's session. Ria, morning, what's on your list?
Well, good morning, Hormuz. Let's start off with Trent first. The net profit has come in at 510 crores versus estimates of 537 crores. EBITDA, however, has been above estimates at 1,081 crores. For Tata Power, they have reported a muted quarter this time around. Net profit has come in at roughly 1,194 crores. Revenue, however, has come in at roughly 14,000 crores versus estimates of 16,000 crores. For Metropolis Health, the net profit has seen an increase of roughly 32% compared compared to the previous year. Revenue has also seen an increase of around 26%, and further, the company has also approved a bonus issue in the ratio of 3:1. For Medanta, they have seen roughly 19% revenue growth on a year-on-year basis, which has been led by developing hospitals as well as international patients. Margins, however, have come down to 19% versus 25% in quarter 3 of last year, and this has been impacted by the opening of the new Noida hospital. For Saman Apollo Tyres, the net profit has gone up by roughly 40% on a year-on-year basis, and the revenue has also seen an increase of roughly 12% compared to the previous year. And further, the company has said that they are also going to invest roughly 5,810 crores in Andhra Pradesh in their plan for capacity expansion. For Cummins for quarter 3, they have missed estimates both on the revenue as well as the EBITDA front. Revenue has come in at roughly 3,055 crores and EBITDA at 635 crores versus estimates of 670 crores. For JSW Cement, the net profit has come in this time around at 131 crores versus a loss of 80 crores in quarter 3 of last year. The revenue has also seen an increase of roughly 13% on a year-on-year basis. And lastly, keep an eye on Marico as well. The company is going to acquire 60% of Cosmix Wellness for a paid-up share capital for 226 crores.
Keep all of these stocks on your radar. Ria, thank you for that update. Over to Mangalam now, joins in with cues from the F&O space. Mangalam, good morning. It's the Sensex weekly expiry today, but what is the F&O data indicating now after yesterday's session?
The F&O data is indicating resilience, and that's exactly what played out in yesterday's trading session as well. If you look at the Nifty and the Nifty IT, you wouldn't believe that the Nifty ended 40 points higher when the IT index was down by almost 6%. The reason for that is Reliance did well, Nifty Bank did well, and at the same time, towards the end, we saw some recovery from the lows on the IT index as well. The range on the Nifty yesterday, the low and the high, told you that, we are now, after that 600-point reset on the way up post the US-India trade deal, we've moved higher from 24,900 to around 25,500 at the lower end and around 25,800 to 26,000 at the upper end. And that ties in with the 20 and the 50-day moving average on the Nifty as well. The FIs, they continue to buy in cash market. Yes, it wasn't a 5,000 crore purchase that we saw in the previous trading session, but then again, it wasn't a 3,000 crore sell that we saw in the sessions prior to that as well. So any non-negative is a positive. The FIs continue to cover their short positions in index futures as well. Yesterday, they bought about 1,800 crore rupees with 6,000 long contracts being covered, and as a result of which, short contracts being covered, as a result of which the FII shorts now are at 81%, longs have increased to 19% in just 3 trading sessions. That's a positive. And in addition to that, they've also written nearly twice as many puts as calls. So that's telling you that there is a lot firmer support than there is resistance on the way up. So if you look at the active options, you would see the 25,700 put fairly active in trade and the 25,800 put fairly active. Both of them have a premium of anywhere between 100 to 150 rupees, telling you around 25,600 to 25,650 is where immediate support lies. On the way up, however, we need to cross past this 25,850 to 26,000 mark very, very formidably.
Keep an eye out on all of these levels. Mangalam, thank you for that update there. On to CNBC TV 18 exclusive. The two global business tycoons, Reliance CMD Mukesh Ambani and BlackRock chairman Larry Fink, came together under one roof to discuss the art of investing for a new era. In a conversation with Shireen Bhan, the industry stalwarts spoke on a broad range of topics, ranging from India's growth potential to AI. Listen in.
Excites me the most is the startup industry. When I interact with startups and we see young 28, 30-year-olds starting up companies, and I can clearly see, right, 100 new Reliances in terms of where and the aspiration, the confidence that they have. And finally, it is the confidence that you see. Fortunately, we now operate across the length and breadth of India.
Let me come back to you on the investing in India's growth opportunity and this new era that we're speaking about, and the role of making strategic choices today, which will require patient capital. And I want to understand from your perspective what it will take actually to build patiently with patient capital over the next 2 decades.
Well, I think that the Indian opportunity, as we stand at about $4.5 trillion of GDP in a $110 trillion world. Right? I see us outgrowing the world and finding our right place. So I am one of those believers who think that this 4.5 in a 20, 30-year period, right, will outgrow the rest of the world, and we will hit $25, $30 trillion. It's going to be 30 years from now, but as we do that, the India opportunity is a 10, 20, 30-year opportunity. And when you think about solving India's energy problems, I am a believer that in the next decade, India will not import 80% of its energy. We have a path, and God willing, like with technological breakthroughs, we will be reasonably self-sufficient in energy.
So when you think about the growth of India, it's not a quarter, it's not a day or a week, it's not a year, it's over a long horizon. And you could say maybe this is the era for India and over the next 20, 25 years.
What excites you the most about India? You referenced the tariffs, and we've had a deal with the US overnight. President Trump and Prime Minister Modi have signed off on that reciprocal tariff agreement. So the overhang has lifted at least on one aspect of that relationship. How crucial a development is that, and what excites you the most about India today?
Well, let's be clear, over 20 years it had no bearing. Maybe over the next 6 months or a year, it had some significant bearing. But over time, the foundational issues of India, how it's able to leapfrog. I mean, you watch what has, over the last, I would say, since the era of the smartphone. And I think that's a pivotal point. 2012 was, I mean, think about your life before the smartphone here in India. But the beginning of the smartphone, the rollout of 5G, and how that transformed India in so many ways. When you think about how the Modi administration digitized the rupee and how it transformed commerce in India across the board, I am very worried about other countries. Even the United States is falling behind.
Take a short break. All the action from Wall Street on the other side. Stay tuned. Now, on Wall Street, it was another mixed session because the technology stock sell-off deepened, and that weighed on sentiments. The Nasdaq was down over 350 points, led by AMD, which saw its biggest single-day fall since 2017. The S&P 500 was down 0.5%. The Dow, though, outperformed, supported by stocks like Amgen and Honeywell. Now, Kate Rooney of CNBC gets us a wrap of all the action on Wall Street.
U.S. markets were mixed across the major indexes in Wednesday trading as the tech trade continues to struggle. The Dow gained 260 points, the S&P 500 fell by 35, and the tech-heavy Nasdaq dropped by 351. The Dow was the lone index in the green on Wednesday as concerns persist about AI disruptions to the software and data sector dragged on the Nasdaq and S&P. Leading the sell-off Wednesday, chip stocks, especially AMD, down 17% after its forecast for the upcoming quarter underwhelmed analysts who had anticipated a stronger outlook based on the AI boom. But AMD CEO Lisa Su defended the company's earnings and forecast to CNBC, saying AI is accelerating at a pace she would not have imagined. And the Trump administration Wednesday announced a new initiative between the U.S., Japan, and EU to shore up the critical mineral supply chain as part of the effort to reduce dependence on China. The three signatories say they'll develop coordinated trade policies and mechanisms and will set the foundation for binding agreements on critical minerals trade.
Kate Rooney, thank you for that update. Now, here's some opinion from Stephen Parker, the co-head of global investment strategy at JP Morgan Private Bank, on the recent tech sell-off and the broader market outlook.
Yeah, I actually think what we're seeing in markets so far this year is very healthy. I think a lot of people would have been skeptical at the idea that we would be sitting near all-time highs, despite the fact that the tech sector is the worst performing sector in the S&P and has fallen more than everyone else. This broadening story that we are seeing is really reflective of the anxiety that investors have had over the last couple of years. It's been all tech all the time. People have been worried about concentration risk. Now we're seeing a rotation. It's about a broadening of the recovery story. Cyclicals are picking up the slack. And it's not just the AI infrastructure plays and the hyperscalers that are driving markets higher. It's actually the AI beneficiaries. That's going to cause some disruptions, particularly in sectors like software.
Take a short break. Cues from the commodities market on the other side. Stay tuned. Welcome back. On to the latest from the White House. US President Donald Trump spoke with Chinese President Xi Jinping last evening ahead of his expected visit to China in April. Trump said that the two leaders had a long and thorough call on trade, military issues, Taiwan, Russia's war in Ukraine, Iran, airplane, engine deliveries, and oil and gas purchases by China from the US. The president added that the relationship with China and his personal relationship with President Xi is an extremely good one. And in other news, in an interview to NBC, Donald Trump also said that Kevin Warsh would not have received the job offer as Fed chair if he had expressed a desire to raise interest rates. And while Trump said that he believes that the central bank in theory is an independent body, he suggested that the Fed should follow his lead because he thinks he knows the economy, quote unquote, better than almost anybody, end of quote. And on that note, Manisha Gupta is now here. She definitely knows commodities better than a lot of us. Manisha, good morning. What is on your radar today?
Well, a lot of volatility, really. It's getting whipsawed on both sides when you look at the precious metal prices. Yesterday was a strong day. Both of these commodities were doing well. But when you look at the trade right now, we haven't been able to hold $5,000 an ounce for the gold prices. And silver, which hit $90 an ounce yesterday, is trading back around that 82 levels. So overnight was a 4% decline for silver. It's trading nearly 5 to 6% on the lower side at this point in time as well. Well, the U.S. key data is delayed due to partial government shutdown. And as you were mentioning, it really is about a lot of conversations that seem to be coming in from the U.S. president. The major one to watch out for is going to be on 6th of February, which is tomorrow. The U.S. and Iran conversation is expected to happen in Oman, and much of the further cues would really come in from that. The profit taking is exactly what we're looking at in case of crude oil prices. That one is trading down 2%. Copper fell 2.5% in the overnight markets as well. So commodity is seeing a bit of a decline across board when you look at those markets. And it's not just commodities. Take a look at the Bitcoin prices, trading at the lowest level since November 2024. So there is some sell-off continuing in all of these places.
The sell-off is continuing indeed. Manisha, thank you for that update. It promises to be an action-packed trading session. We take your leave on that note. On Power Breakfast from me and the team, thank you for watching. Bazaar Morning Call on the other side sets you up for the day's trade.